Stocks trade both ways in range trading ahead of the US FOMC meet and also inflation data in India and the US this week. Real estate as well as IT stocks perk up while consumer durables and capital goods slip in trade.
Financing arm TVS Credit gets a fund infusion from Premji Invest even as the company buys a residual 25% minority stake in its Swiss e-mobility subsidiary. Brokerages give the deals a thumbs up.
SRF and Navin Fluorine dip following a May export data release. Even pharma stocks, Divi's Laurus Labs and Gland Pharma trade soft on weak data, but Lupin as well as Syngene gain on a strong showing.
Go Fashion slides after a prominent stakeholder offholds its stake, while a placement of shares by Titagar Rail Systems with a marquee foreign institution at a steep discount hurts the stock.
Hello and welcome to Business Lunch. I'm Nisha Podar and with me as always is my co-anchor Pavitra Parekh. Pavitra, good afternoon. So Nifty 50 trying its level best to hold on to that 18,600 level, and that has been a struggle that we have seen today. So really opening the market around those levels today and sustaining round about that. At the moment, slightly below that. If we really take a look at the overall picture, it's the broader markets which are really performing today. Mid-caps outperforming the key indices at the moment and with 145 points gain on the mid-cap index. When we look at the financials, well, that's showing a slight bit of underperformance and is showing a red tick on the flatline bank Nifty. On my screen at the moment, some of the IT names are perking up in trade and doing well. When we talk about the advance decline ratio, well, in favor of the advances with the broader market participation that we are seeing on Monday afternoon, Pavitra.
Oh, absolutely. This broader market participation really continues to, be the big story. So for now, again, you have a lot of these individual stocks which are moving and seeing some big moves coming through, even while on the headline index itself, it looks quite flat, right? So some of those names, of course, there have been block deals in Go Fashions as well as CMS. So those stocks will be up on your screen. Nisha was mentioning the IT space. The index in itself is up 1.5%. But take a look at how some of these stocks have moved. Of course, the larger names will, come up for you. But the move is even more pronounced in the mid-cap IT names. So do keep the likes of Sonata, Nucleus, all of these on your radar. You also have the defense space buzzing again. And on the downside, in addition to the financials, like Nisha was pointing out, it is a lot of these large cap stocks which are, a little bit soft in trade. So you have something like an ITC, Reliance, HDFC Bank, which continue to trade soft. So that is the shape of the market. We'll keep coming back to this. But first up, let's begin by focusing on some of these stocks which are seeing big moves. So Go Fashion is under pressure. This following a big block deal. Vivek is joining us with the details on this one. Vivek.
Well, absolutely. Earlier today, prior to market open, we highlighted and, we had alerted to the fact that there was going to be a very large block deal as far as Go Fashion is concerned. More than 10% of the equity has changed hands along expected lines. Now, we had access to the term sheet yesterday, and as per our sources, what we understand is that Sequoia Capital that held 10.18% stake in the company at the end of the March quarter has completely exited their stake. It's a clean out trade from Sequoia Capital. So now after this particular block deal, they won't be having any stake left as far as Go Fashion is concerned. The floor price at which this particular block was set at was 1,135, which led to a total block of close to a little over 620 crore. A large block deal, likely seller being Sequoia Capital. It's a clean out trade from them. It'll be interesting to see who the buyers are once, the block deal details come out, post-market hour on the exchanges.
Thanks for that, Vivek. Yeah, of course, with the equity market window provided, a lot of trading as well as fund infusion is really taking place. Let's focus on TVS also, which is buzzing after financing arm TVS Credit gets a fund infusion from Premji Invest, and the company also announces that it will be buying the residual 25% minority stake in its Swiss e-mobility subsidiary. So brokerages give the deal a thumbs up, and Sonia Shanoy is right here with all the details of this transaction and what it means for the company. Sonia.
Well, thanks a lot for that. As you rightly pointed out, TVS Motor is buzzing in trade today. The stock is at a fresh lifetime high. The stock is up almost 30% in 2023. There are, of course, several positives going for TVS Motor, but today we are focusing on two such. One of them, of course, as you rightly pointed out, is that TVS Credit Services has got almost a 500 crore equity infusion from Premji Invest. Now, it is the captive financing arm of TVS Motor, and there are two positives in this. One, of course, there's value unlocking, so that is a positive. The other thing is that now TVS Motor will have to, can stop funding the TVS Credit Services business. So that will give TVS Motor's balance sheet a bit more strength. If you remember, in FY23, all of FY23, TVS Motor has invested almost 500 crores in the TVS Credit Services business. So now that they're getting external funding, the funding internally will stop, and that's a positive. Now, BofA Securities and Macquarie have aggressive target prices. BofA Securities has raised their target price to 1,500 from 1,300 earlier. Macquarie has a target price of 1,400 plus. Macquarie says the stake sale values TVS Credit at over 7,100 crores, and which is equivalent to about 96 rupees per share for TVS Motor. Now, the other news flow that we're looking at is TVS Motor has acquired the remainder 25% stake of SEMG, which is its Swiss e-mobility arm. Remember, it earlier had bought 75% stake, and now it's completed that acquisition. So SEMG is now a 100% subsidiary of TVS Motor. Now, why is this important? Because SEMG, as I said, is a Swiss e-mobility business. What they do is they buy e-bikes from manufacturers and they sell it to the end consumers, both in the B2B and B2C segment. Now, this is important because, they are present in spaces in Europe like Switzerland as well as Germany. They, in fact, have 30 retail stores across Switzerland and Germany, and they have $100 million of revenues up until now annually. So it is a very strong business. Now they've completed the acquisition, which cements TVS's space in the global e-mobility business. And of course, it's part of their growth strategy there. Back to you.
Right, Sonia, thanks a lot for running us through all of those details on TVS Motors. Another stock that we're looking at today is PI Industries. This one is buzzing after one of its biggest customers has reported strong agrochemical sales growth. This is for the last 6 months. So Sonal is here to tell us more about that. Sonal.
Thank you so much for that. Well, PI Industries is in focus because one of their largest customers, which is a Japanese company, Kumiai, has reported a 23% growth in their first half of FY23 numbers. That is the agrochemical numbers. So basically, that is from November 2022 to April 2023. They follow the October financial year as their annual year for reporting numbers. This was fueled by a particular sale of particular product sale, and that is pyroxysulfone sales. Now, they have also raised their earnings forecast for FY23 on the back of good numbers that they reported in first half itself. The growth was 42% for this particular product. They had earlier guided for a growth of around 34%. So this one product is doing very well for their largest customer, and that is something which is fueling the rally that we are seeing in PI Industries. There is a note from Equirus where they say that a good show and earnings guidance increase bodes really well for PI Industries, because this implies there is no inventory build-up for this particular product. Now, remember, we have spoken to a lot of agrochemical companies. UPL, for instance, said that globally there is a huge inventory build-up in agrochemical products, but that does not look like the case after this positive commentary from the Japanese agrochemical player. And that is something which bodes well for PI Industries, and that is something that they said post their conference call as well. No big inventory build-up, particularly for that company, and that is something which is fueling the rally that we are seeing in PI Industries today.
That's right, Sonal. In fact, Street likes what they're hearing from PI Industries, and the stock is up almost 3.5%. On that note, we'll slip into a short breather on Business Lunch. But up next, we'll get you some of the previews to the important macroeconomic data that are going to be announced, the April IIP data, as well as the May CPI data that is due later today.
Hey guys, welcome back. You're still tuned into Business Lunch. Let's bring you our special segment Fin Street now, where Abhishek is standing by the big wall with an in-depth analysis of what the AUM growth has really looked like for the housing finance sector. Abhishek, take us through how the numbers have stacked up.
Well, housing finance companies have seen robust growth in their AUM in last 3 years. There has been a huge differentiation between the men and the boys. SDFC Limited has seen robust AUM growth. So the impact from COVID, all those who had seen robust momentum and growing faster than the system growth rate till FY 17 and 18 bore the brunt of fast rundown of their books. Hence, clearly, there has been a huge differentiation between the quality amongst lenders. Not to forget that some of the small-sized companies have done robustly well, like Aptus Value Housing, which has seen its loan book double in last 3 years. Home First Finance also has doubled its loan book in last 3 years. And Aavas Finance has seen a growth of around 82% in their AUM in last 3 years. Indiabulls Housing Finance as well as PNB Housing Finance, they have seen their AUM decline in last 3 years. So Indiabulls book has actually declined by around 27%, while PNB Housing Finance book has declined by a little more than 20%. Incrementally, the growth of SDFC Limited in last 3 years is 2x the entire listed HFC sector in terms of value-wise AUM growth. Net interest income growth was around 18% YOY and about 7.6% quarter-on-quarter. This growth was led by strong growth seen in LIC Housing Finance, SDFC Limited, Home First Finance and Aavas Finance. The only company to see a decline both YOY and quarter-on-quarter in NII was Indiabulls Housing Finance, while sequentially the NII declined for PNB Housing. Operating profit growth was at 15.3% YOY and around 10.7% sequentially. Strong operating profit growth was seen for LIC Housing Finance, SDFC Limited, Aavas Finance and Home First Finance. PNB Housing Finance operating profit declined both YOY and quarter-on-quarter, while Indiabulls operating profit actually declined on a sequential basis. Net profit for the HFCs grew by 17.4% YOY and about 28% quarter-on-quarter. SDFC Limited led the growth this time around with nearly about 20% quarter-on-quarter growth in terms of profits. LIC Housing Finance profit growth was seasonal in nature, while Aavas Fin and Canfin showed good growth on a sequential base in terms of their earnings. AUM growth was a bit on the lower side for the companies, growing at around 10% YOY and 3.5% sequentially. Take the loan growth with a pinch of salt, as tenure has increased for the loans with lower repayment in EMI and higher repayment in interest in the EMI mix. Asset quality has improved, with gross NPA being down 19.7% YOY and 13.5% sequentially. Declining gross NPA was led by SDFC Limited, which saw its gross NPA decline by 30.4% YOY and about 18.25% on a sequential basis. PNB Housing also saw improvement in its asset quality as well. Gross NPA is the lowest for Canfin Homes and Aavas Finance, while it is the highest for LIC Housing Finance and PNB Housing Finance, reflected in their valuations as well. So HFCs in Q4 FY23 saw NII growth of 7.55% quarter-on-quarter, operating profit growth of 10.7% quarter-on-quarter, while the PAT growth was robust at around 28% quarter-on-quarter. Net interest margin will improve for HFCs with repricing of their loans in terms of aiding their yield going ahead. So HFCs have battled the liquidity conditions really well, and high cost of funds challenge has also been taken care of. So outlook remains good for the sector, and its return ratios can improve from current levels.
All right, Abhishek, thanks so much for that deep dive analysis on the housing finance companies and the sector on the whole. I must also point out that private equity has infused a lot of fund and really backs this particular sector, still eyeing more assets in this, a lot of them. All right, let's talk about the macros then, and especially an eye on the inflation, which RBI is also keeping an eye on. So today we are going to see May CPI numbers as well as the April IIP data. It is due later today in the evening, and CNBC-TV18 poll sees India May CPI at 4.35% versus 4.7% a month ago. Lata Venkatesh is right here with all the details of the poll and what to expect. Lata.
Yeah, that's right. The number is expected to come at 4.35 according to a poll of about a dozen economists. And its low, 4.35, would be a 20-month low if it comes at that level. But that's also because, look at the year-ago number, 7.04. So a high base is also important. And the RBI forecast for April, May, June, which they released on June 8th in the policy, was anyway 4.6. So if you do the math, It should come at 4.4 in the month of May. If it comes at that level, of course, that would be great, or much lower than that. Now, within this, what would you watch out for? You would watch out for core CPI. Core CPI may be a little higher than what it was in April. It's expected to come at 5.3, and for April, it was between 5.1 and 5.2. This is because there is also a base effect. April base was very high, but there are other items which have gone up. The non-core, that is the agri products that you will watch out for, will be cereals. There is widespread fear that rice prices have risen. So there could be, if there's any upward shock to this 4.3, it may come from rice. But that could be countered by a downward surprise in vegetable inflation. Vegetables normally go up in May, but this time it didn't go up so much. So seasonally adjusted, that may counter anything negative that comes in cereals, is what economists are watching out for. So all these things would be watched out for very carefully. A word on the IIP number. April IIP is expected to come rather poor, 1.3%. The reasons, March also was bad. It wasn't, it was in 1.7 or thereabouts. The reason why April may also be lower is because look at again the year ago figure, 6.7%, high base. Last year we were coming out of Omicron, so high industrial activity, and that could also explain the poor performance. But the bigger reason for the 1.3, the sorry figure, is that we already know the April imports and exports both have done badly. So low imports signify lower industrial activity. Low exports also mean lower economic activity, industrial activity. Those would be important. You would watch out for the rural demand proxies. Consumer non-durables, the soaps, personal products, those are expected to do well. And if they do so, that would be a proxy that rural demand is finally recovering. There are two views in the market on that. So we will have to watch out whether actually you see consumer non-durables doing well. These are the various things we would watch out for in terms of the nuances or the constituents of the IIP and the CPI numbers.
All right, Lata, thanks a lot for getting us that preview. We will, of course, have Lata back once the numbers are out to take us through what it's really looking like and all of the fine print. But with that, let's also bring you some updates on the UBS and Swiss Bank, which has formally completed the takeover of Credit Suisse. Today is the last trading day for Credit Suisse shares on the Swiss exchange, and the combined entity will now operate as a consolidated banking group. As per the original negotiations, shareholders will receive one UBS share for every 22.48 Credit Suisse shares held. So that is important news that we're tracking as well. But with that, it's time for another short break. On the other side, IMD says Cyclone Biparjoy will start weakening by this evening. Orange alert has been issued for the Saurashtra coast in Gujarat as well. We're going to bring you all of the details after this short break.
Welcome back. You're watching Business Lunch, and a quick look at the markets at this point. Yes, markets have gained some more ground in the last few minutes of trade. Nifty 50 comfortably above 18,600 levels, but that is the struggle, the line that they are looking at the moment, 0.25% up in trade. Mid-caps continue to rule the roost today in the markets. In fact, broader markets performing well. But if you really look at some of the stock-specific action in the last half an hour of trade, some of the Birla Group companies like Hindalco, Grasim, Ultratech, all of them have gained momentum. And some of the other metal counters like Tata Steel, JSW Steel are doing well. Infosys, remember, continues to be the top contributor and goes smoothly ahead with over 2% gains. And Reliance Industries coming back to the high point of the day is also good news for the index. So that's a picture of the market looking stable. Let's get you some of the weather updates across the country as well, and anticipating heavy rainfall from the cyclone Biparjoy. Well, the India Met Department has issued an orange alert for the Saurashtra and Kutch coasts in Gujarat. Now, the state government has also deployed NDRF and SDRF teams in coastal areas for evacuation and also aid operations. Now, the Weather Bureau also announced the arrival of monsoons in Maharashtra last afternoon, with rains lashing some coastal areas of the state. It has forecast heavy rainfall for the next 48 hours as the monsoon now progresses towards Telangana as well as the Chhattisgarh region. So, yeah, Gujarat as well as Maharashtra are on, the alert at the moment because of the cyclone and the rainfall, Pavitra.
Oh, absolutely. In fact, on this, we also spoke to the IMD this morning. So let's listen into what they had to tell us on how the cyclone is really proceeding.
See, at present, the system is over east central and adjoining northeast Arabian Sea. Okay, it is around 340 kilometers southwest of Porbandar and 650 kilometers south of Karachi. Now it will move northward till this evening, and slowly it will start, till 14, and thereafter it will start moving northeastward and likely to cross, the region between Karachi and between Gujarat area, actually, in Saurashtra and Kutch. While, from today evening, it will also start slightly weakening. And when it will cross, it will be around, it will be again very severe cyclonic storm with a wind speed of 125 kilometer to 135 kilometer, gusting to 150 kilometer.
All right, that is on how the cyclone is really likely to move. Important to bring you that update, and we'll keep tracking this closely as well. But let's also bring you updates on the situation in Manipur. After a month of unrest in the northeastern state, the centre has announced a peace committee chaired by the governor of Manipur. The committee comprises of 51 members and includes those from the two main warring groups, that is the Meitei as well as the Kuki communities. However, several Kuki members have objected to the committee as it was appointed without consent. Meanwhile, the government of Manipur has also suspended internet and mobile services in the state, and this is until the 15th of June. Officials say that this is a bid to curb the spread of rumors and disinformation across the state.
All right, with that, completely out of time on this edition of Business Lunch, but stay tuned to CNBC TV 18 because Mid Cap Radar comes up next. Thank you so much.